Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 6th of June 2025. First chart is the US dollar index futures. They closed very slightly lower this week after flirting with previous support. You can see the market dipped lower here, but recovered to close back above the important level. This is previous support, which is just below the longer term trading range, marked in green. We've seen weakness emerge when this market attempted to recover back into the longer term trading range. And then again last week, the market attempted to recover and closed well off its highs, suggesting that supply was being drawn out again. This week, the market's effectively tested for supply, which is exactly what you would expect under these circumstances. Volume increased a little bit, so there was some supply present, but the market recovered to close above the important level here. So while the market's flirting with a breakdown, at this point there is sufficient demand in the market to maintain a position just above previous support. Next chart is the E-mini S&P. This is S&P 500 index futures. This week the market recovered slightly. We put in some lines here. We've got this congestion in the background here, which the market spent a little bit of time absorbing. And there is further congestion above, up here, which is likely to hold some stale supply. 3 weeks ago, the market pushed up adjacent to that level. Last week, the market pulled back to absorb supply, and this week the market's recovered somewhat, or within this range. I would expect this market now is reasonably well placed to make an attempt to push higher. There is likely to still be some supply drawn out from this zone, but I do expect that a reasonable amount of this supply has been drawn out so far. Volumes are reducing at the moment, and the market's recovered most of its lost ground from last week, which suggests that supply is relatively low in the market at this price level, and that will allow the market to make an attempt at least to push higher in response. US Treasury 10-year note futures. Price continues to trade within the range of this widespread down bar. We saw some supply emerge up here. The price came back down and it's been consolidating ever since. Effectively, these two bars were consolidating, absorbing supply. There was a brief attempt to push higher in response, and that failed last week, and price came back. The volume is very low. For some reason, the data didn't come through for the last 2 days trading, so the volume is lower than it really is. There's 2 days trading missing there. But price has pulled back this week. You would suggest that some supply has been drawn out, but I would expect the market will continue to attempt to consolidate sort of in this area here at the lows of the range. A break below these lows probably would be significant in the near term, but I expect there will be reasonable support found within this little zone here. Copper price futures. Copper price futures are trading within a larger down bar as well. We saw some supply emerge up here from this bar. Price came back in an exaggerated fashion, to be honest. Spread was much wider than the volume suggested it should have been. Buying support came in almost immediately. Price has traded in consolidation mode in here for a time now. There was an attempt to break out this week. Remember that the gap there goes back to the previous close, like that. So the fact the market still closed as an up bar this week is a positive. It just wasn't able to break above what you might call the mini breakout level up here. And some supply has been drawn out in response, and that's shown by the increase in volume to slightly above the average. I don't think it's anything too serious, but the market may have to do a little bit of work to absorb that supply before the market can continue higher. If supply becomes a little overwhelming, you may find the market pulls back a little in response and tests for supply prior to any further attempt to push higher. Gold price futures. Gold price futures continue to draw out some supply, and demand isn't quite as strong as it has been recently. We saw supply drawn out up here previously. In response, buying support emerged almost immediately in both occasions. There was a test for supply last week, and that opened the door for an attempt to push higher. The market did attempt to push higher, but it did draw out some minor supply. Volume was low, so there wasn't a great deal of supply. That suggests it was probably a lack of demand in the market last week, which saw price close closer to its low than its high. It did still close as an up bar, and that generally suggests that the buyers continue to hold the upper hand, but there wasn't real intent to push higher this week. The lower volume suggests that the buyers really weren't there. They were still absorbing supply at best. So that doesn't really suggest that this market is weak. It was probably a timing issue more than anything. Now, you may find an early test for supply in response next week due to that fact before there's any attempt to push higher in response. Silver price futures. Silver price futures were a bit of a star this week. They've made a serious attempt to break out. Here's the highs of the range through here. And the market spent 1, 2, 3, 4, 5, 6, 7 weeks in consolidation mode here. And it did look pretty quiet last week, although spread did narrow on low volume, which did suggest that selling pressure was low. But it appeared to be following gold up till that stage. And this week, price has accelerated higher with an increased spread up to new recent highs above the highs of the range here, closing strongly up near the week's high. This was a good move. This was a good, strong move. And there may be some consolidation in response. There generally is to a widespread up bar like this. What you're looking for is the depth and duration of the pullback to consolidate in response. The shallower and briefer, is that a word? The period of consolidation is, the stronger the underlying market. So if the market just pulls back with a relatively shallow pullback and then almost immediately takes off, that suggests the market's very strong. But if the market has to come back and continue coming back because supply is drawn out before there's an ability to absorb all the supply, push back up to the highs of the range, and then make an attempt to continue the breakout, the market is nowhere near as strong as if the period of consolidation is done right up high in the range of the up bar. So the depth and duration of the pullback in response to absorb any supply that's been drawn out from the push higher will give you an indication on the actual underlying strength of the market. Like crude price futures continue to trade sideways. Kind of suggested they would do this. There's no great impetus for a push higher in here at the moment. Price did push up to the highs of the range this week after 2 weeks of consolidation, which is nice to see. This breakdown line here in the background around the $65 level is likely to be difficult to break above. Certainly possible, but it's likely to take an increased effort to push above that. I would expect to see a little bit of work done at this level prior to any attempt to break out above that and push above this breakdown line. It may be that the market just continues sideways in absorption mode for a bit longer before there is any serious attempt to break out. But that remains to be seen. Into the currencies now. This is the Euro-US dollar currency pair. And you can see back here, the market had gathered itself up. Some buying support emerged down here. Then there was some consolidation in response. The initial breakout came here from that level, pushed up, some further consolidation in response. Secondary breakout, push up to the highs. Some supply was drawn out on this bar and the market came back in response. And then after a push higher, there was a half-hearted attempt to challenge this highs of the range level this week. It wasn't well supported, which you can see with the low volume, below average volume. It was more a half-hearted attempt, mostly on a little bit of weakness in the US dollar before the US dollar recovered, because this market does trade strongly the inverse of the US dollar and perhaps not so strongly on the actual fundamentals in the Eurozone, unless something actually happens. So there was a weak and half-hearted attempt to break out above the highs of the range this week. The fact that the market still closed as an up bar suggests there is some strength in the market, which infers a bit of weakness in the US dollar, which we'll see as time goes on. British pound currency futures. Similar to the euro, we saw some buying support emerge down here and a push higher and some consolidation in response. And the consolidation took place over two separate little periods here with a push higher in between before the actual breakout took place here. Market spent some time in consolidation before pushing higher again. And after a short period of consolidation, the market continued higher. There was a little bit of weakness inferred last week, but the market recovered this week and continues to maintain its position right up here at the highs. Volume increased, was almost average this week, so that was genuine volume, genuine trading, no anomalies involved. This market continues to trade a little stronger than the euro. Japanese yen currency futures. And it should be noted that this market didn't download volume for 2 days this week, so the volume is lower than it actually was in real life. 2 days volume wasn't included. This market's flirting with the previous highs to the left here. We saw some weakness emerge here, a period of consolidation in response, a push back up towards the highs of the range. This is a zone of resistance above, and then the market's been consolidating since. This week's bar traded inside the range of the previous bar pretty comfortably. So there's absorption going on there, and this opens the door for an attempt to push higher when trading conditions are favourable. That also infers that the weakness in the US dollar is expected in this market, as have the previous two charts. So it does appear those markets are expecting the US dollar to break down, but that remains to be seen at this point in time. Aussie dollar currency futures. We've seen this market trading a little stronger than I expected initially. Price has moved above this line here. Next one above comes through here. And price is grinding its way through here pretty comfortably at the moment, with a little more vigour than I expected. Last week saw some weakness inferred, although the close was within the range of the previous bar, and this week saw price recover that to close up adjacent to the more recent highs there. It's a pretty good move, really. Volume remains below average, but it wasn't reduced, so it was about level with the previous week's trading. This market's looking a little stronger than weaker, and it also infers this market may be expecting the US dollar to push lower. The next level above comes through up there, so it won't be surprising if there is some weakness in the US dollar to see the Aussie dollar trading in this range here, adjacent to the 66 cent level. Bitcoin futures traded in consolidation mode again this week, which we expected. Back down here is where we saw some consolidation and then a breakout up here. There was 1 week's consolidation here before new highs were established. Some supply was drawn out and was pretty strong supply up here as price traded above these new highs. And eventually the supply won out on this bar. Price broke down. There was some buying support emerge off the lows, which you can see here. And from that point, the market moved into consolidation mode. This is a normal pullback in response to supply being drawn out. Pull back, challenge the sellers, then move into consolidation mode. And that happened for 7 weeks of consolidation. Then there was a secondary attempt to push up to the highs of the range, which if I carry that line across, you can see price pushed up to the highs of the range here, a week's consolidation, an attempt to break out. There was a close off the week's high, which suggests there was some supply in the market, and the volume being above average for the breakout, and the close off the high suggested there was some supply being drawn out. It wasn't as heavy as back here, but there was still supply being drawn out, and in response, the markets pulled back, challenged the sellers, consolidate and absorb supply, and this week, volume reduced to below the average on this week's bar. That suggests that selling pressure, at least at this level, has reduced and is below the average now. And that opens the door for an attempt to push higher again and effectively complete the breakout. So what you would say has happened here is an attempt to break out, a return to the breakout line to test the market for strength. It's been established that selling pressure appears low now, and that should open the door for an attempt to continue higher. Most likely when trading conditions are favourable, this market's in a bit of a hurry more recently, so it's probably going to be next week sometime. You may find an initial test for supply early next week or over the weekend, but the door is certainly open for an attempt to push higher in response. Back to the US dollar index futures just quickly. It's pretty self-explanatory what's going on at the moment. Here's the previous support level where support came in. We saw an attempt to recover back into the long-term trading range, which failed. Supply was drawn out. Price came back. There was an attempt to recover within that bar's range last week. The close suggests that supply continues to be drawn out and demand is weak. This week saw a test for supply. The market did recover back above this important level, but the market is flirting with the lows here, and it wouldn't take much of an increase in supply for the market to break down below this level, which would be significant. It would be a significant level to break below. A clear break and close below this level would certainly see a cascade of some description lower, like this. So watch this market carefully. It'll be instructive, and it will shape to some extent some of the other associated markets, especially the currencies. Okay, thanks for your time. Back again next week. See ya.